Hello, everyone. Welcome to our channel, The Audible Review. Imagine this, getting, amazing investment returns, but doing it with what feels like almost zero risk. Sounds like a bit of a dream, maybe. But that's basically the promise Mohnish Pabrai makes in his book, The Dhandho Investor. So today, we're doing a deep dive into this really simple, but maybe counterintuitive philosophy, the one that let him turn, $1 million into hundreds of millions. Our goal here is to figure out the secret to this whole asymmetric betting idea.
Yeah, it's fascinating stuff. And Pabrai's approach is really rooted in his background. He's this Indian-American investor. People often call him a disciple of Warren Buffett. But his framework, Dhandho, it's quite specific. The whole thing hinges on one core idea. Heads I win, tails I don't lose much.
Okay, heads I win, tails I don't lose much. That sounds incredible. But what does Dhandho actually, mean in practice?
Well, Dhandho is a Gujarati word. It literally means something like endeavors that create wealth.
Yeah.
But for Pabrai, it's about finding businesses or investments where the downside risk is just tiny, maybe even zero, but the potential upside, huge. It's about finding those spots where the odds are just massively stacked in your favor. Then patience becomes your biggest asset.
Okay, right. Let's unpack this a bit more. If the risk is so low, where does the big reward potential come from? Let's get into maybe the 5 core principles, because this seems to be where Dhandho really becomes more than just standard value investing.
Absolutely. It's all about finding those asymmetric bets where the potential win is just way bigger than the potential loss.
Yeah.
So the first thing, the absolute foundation, is the low-risk, high-return mindset. And this isn't just wishful thinking. It means you actively hunt for scenarios where assets are deeply, deeply depressed. And that ties straight into the second principle, the margin of safety. This is crucial. You always protect your downside first before you even think about the upside. How? By buying assets way below what they're actually worth, their intrinsic value.
Right, the classic dollar for 50 cents idea.
Exactly. Even if the market only prices it at, say, 75 cents later, you've still won.
We hear margin of safety talked about all the time, though. Is Pabrai just sort of, repackaging Buffett and Munger? Or is there a specific Dhandho twist here?
I think that Dhandho innovation is in the kind of situation he looks for. He combines that margin of safety with principle number 3, invest in simple businesses. He steers clear of complexity. Why? Because complex industries, well, they hide risks. They make calculating that real value almost impossible. He really follows Buffett's advice here. If you can't figure it out quickly, almost on the back of a napkin, just avoid it.
That makes sense. Focusing on simplicity because it protects the downside. It clicks.
And the last 2 principles, they really come down to discipline. Number 4 is copy the greats. Pabrai is very open about this. You don't need to reinvent everything.
Yeah.
Learn directly from the people who've already proven it works, like Buffett. And number 5, and this might be the hardest one, is patience is power. This is where so many people fall down. Dhandho investing demands you wait, sometimes for years. You wait for that perfect pitch, low risk, high reward because you're focused on not losing money. You actually gain this clarity. You can afford to sit tight, wait for those moments of extreme uncertainty like market crashes.
When everyone else is panicking.
Exactly. When others are fleeing, assets get ridiculously cheap. That's the Dhandho opportunity.
What really strikes me is how this asymmetric bet idea applies way beyond just investing. Like, if you're thinking about a big career change or starting a business, you can apply this Dhandho thinking. Structure it so the worst thing that can happen is manageable, minimal even, but the best case scenario, potentially life-altering.
Absolutely. And zooming out, Dhandho is really about compounding wisdom, not just money. It's not about chasing the latest trend. It gives you a kind of blueprint for long-term growth. It teaches you to see risk differently, not just something to manage, but something to almost eliminate before you even make a move. It really boils down to finding those few really obvious chances that truly matter.
Which brings us right back to that core idea, doesn't it? Heads I win, tails I don't lose much. If you only take those kinds of shots, how many big decisions do you really need to make? Maybe the goal isn't frantic activity, but more like profound stillness, just waiting for the right moment. Like, share, and subscribe to our channel.